Interest rates hit their highest level since early December, and Fed Chairman Jerome Powell has a revealing interview with 60 Minutes. This is all going to be covered in your mortgage rate and housing update for February 6, 2024. I'm Reggie Green at Green Home Loans. Let's jump right in. Starting off with Tuesday and Wednesday. So the Fed meets on Tuesday and Wednesday, followed by a statement and a press conference on Wednesday. And the Fed states they are not going to raise or lower the federal funds rate. They're going to keep it the same in that 5.25% to 5.5% range that it has been at. So we actually saw some nice rate improvement on Wednesday. Then Friday comes along and the BLS jobs report comes out, and the BLS job creation number was 353,000. The market was expecting 180,000. So whenever you see something just blow the expectations out of the water, especially when it means positive economic activity, you're usually going to see rates rise. And we saw one of the biggest rate rises on Friday that we've seen in recent, months and years. So we saw a big rate increase on Friday. Now the weekend comes along, Jerome Powell does an interview with 60 Minutes. In an interview, he states the Fed is dead fast on getting that inflation number to 2%. They are not going to necessarily wait until they lower the federal funds rate until it's at 2%. They could do it before it's at 2%. But he said it was highly unlikely that when the Fed meets in March that they're going to lower the federal funds rate, when a lot of the market was expecting that could be the date when they actually lower it. So the next meeting with the Fed after March, if they don't lower it in March, is in May. And he kind of hinted that it was probably going to be middle of 2024 when the Fed actually lowers the federal funds rate. And I think whenever you see that happen, that's when you're going to see the rates really start dipping. Is we expect rates to drop in 2024. It's just not this neat, linear, easy going downwards. It's usually like this, but it eventually goes down. So lastly, on Monday, we got the PMI index, which measures the non-manufacturing index of the U.S. economy, and that beat expectations as well. So we're seeing a lot of positive news in the economic numbers, which means rates are going higher. So right now, you're looking at interest rates in the high sixes if you want to pay a point for a conventional loan, low to mid sevens if you want to do 0 points. And then FHA and VAs are going to be a little bit lower, that usually in the low to mid sixes, depending on how you want to structure your costs and your closing costs and where your credit is. One of the biggest concerns we get from home buyers is, am I purchasing at the right time? Is the market going to go down or market going to go up after I purchase? And one of the things I always tell people is if you plan on being in this house long term, it's almost always a good time to buy, because homes are going to appreciate over time. Where you really have to worry about that is if you're doing a turn and burn, a fix and flip, or something short term. And this graphic that came out recently really reflects it. I'm going to share it down here. But what the graphic states is if you bought a house anytime from basically 10 years ago through 1942, and you held on to the house for 10 years, your house would be worth more in 10 years in every single year you purchased a house except 2006. So that's why we always say real estate is a good investment. It's not necessarily about buying at exactly the right time, because if you do hold it, you're usually going to see some good appreciation over time. Now, I'm Reggie Green with Green Home Loans. That's your mortgage rate and housing update for February 6th, 2024. Hope you enjoy the Super Bowl. For us Phoenicians, hope you enjoy the Phoenix Open. I hear it's going to be a little rainy out there. Hope you have a great week. Call us if you have any questions. Reggie Green, Green Home Loans, 480-206-5577. Have a great week.